So to give a little bit of color about crossover markets and what we do in the cryptocurrency market, we are the world's first ever crypto ECN. We are the world's first ever execution-only platform, and we are the fastest execution engine in all of crypto. And what we're here to talk about today is the concept of lowering the cost of trading, specifically lowering the cost of capital and lowering the cost of trading fees via spread and commissions. Crossover Markets and our platform, the CrossX ECN, is designed to lower the cost of execution. And I'm happy to be here with Brett today, who we think is going to be a driver in lowering the cost of capital.
And we're here today with Crossover Markets. BitGo is obviously best well known as a wallet provider and a custodian. In the last 18 months or so, we've been growing out our trading and prime services business. And Crossover Markets falls naturally into that product set, whereby we want to help act as a central clearing provider for the trades executed on their platform. The reason BitGo wants to enter into this partnership is really growing the kind of ecosystem. So at the moment, there are a certain number of providers that will kind of look after the flow of crossover markets. As we see the kind of step change in kind of the administration in the US towards crypto, we think that a number of these TradFi participants are going to come into this space. Your flow obviously acts very much like our backgrounds. We're from FX Prime Brokerage. It follows that background. That's a background that these institutions know and understand very well. It's very easy for them to now come into crypto and be able to adopt this, settling at a qualified custodian, somebody they trust in the US.
One thing we want to get into is that we're at a pivotal moment in time in the digital asset space. Post the election, what we're seeing is quite a bit of adoption of institutional participants who are not currently in the market, who are looking to engage in the space. And one of the big drivers, one of the big things that we think needs to happen in the space is there needs to be a separation between church and state. There needs to be a separation between the custody of choice, the clear of choice, and the execution or the liquidity access of choice. BitGo, as we know, has operated in the custodial space for a long time, an incumbent winner in that particular vehicle. And we're very excited that now you're entering the space through the network to clear trades and to do so anonymously. And I want to come back to this point on anonymity. For our purpose with CrossX, we've always championed the idea of being execution only. What does that mean? It means an institutional participant can buy Bitcoin dollar on CrossX, and 10 minutes later, they're not captive to sell Bitcoin dollar with CrossX. They can do that through any other destination or liquidity source on offer from the prime broker. We think this is important because this helps drive down the cost of trading because it promotes competition. And so it puts us in the position where we need to compete every second of every day to win a trade. Fundamentally in the space, what we all know is that crypto, for really since inception, has been dominated by this vertically integrated model such that the provider of custody is also the provider of execution and also the clearer. And so this is kind of the antonym of the spirit of what we're up to, where that type of model effectively owns the customer captive. And so if you buy Bitcoin dollar at exchange A, you must sell Bitcoin dollar at exchange A. And we think ultimately, the biggest disadvantage to that model is the fact that that just increases the cost of trade.
Yeah, and I think, look, leading on from that, as I say, BitGo has been known as this custodian, this wallet provider, and I think the foray into trading is very good for us. But on the other side of it, you've got in traditional finance, you have the major banks, they have trading arms, they have custodian arms, and then they act in the kind of prime brokerage space, and that's where we're kind of very excited to be pushing into. We offer the product slightly differently, so clients can come in, they can delegate balances to you, so they can kind of get their trading capability. And then we think for the market makers, the liquidity providers are out there, it's a very interesting dynamic for them to be able to come in and know that they're trading with those clients' assets kind of already kind of allocated towards them for trading, and then increasing kind of settlement cycles. So, trying to get through this into kind of not real time, but being able to provide them some credit where they can trade with you throughout the day and get those settlements on a periodic basis.
Sure. Maybe I'll add one thing that is worth noting, something that you guys do that is not trivial, right? And it is, if we look at the backdrop of where crypto came from. Part of the idea of crypto was the ability to trade anonymously, right? The ability to have kind of an anonymous footprint as you access an ecosystem. And on CrossX, on our platform, obviously all of the trades are anonymous in nature. The buyer does not know the seller. The buyer knows the prime broker. The seller knows the prime broker, but they don't know each other. And we can get into maybe perhaps a little later about why that's so advantageous. But one thing about us is Crossover Markets, we finished our last year. Last year was our first year of live trading on the platform on CrossX. And one of the things we found in talking to various participants who would like to act in the role of a prime broker or a clearer is that the market struggles with the concept of settling an anonymous trade. Again, this struck us as highly ironic. But when you think through it, it's not a trivial thing to do. I think, Brett, your experience from the FX market, this is old hat. This is something you know all too well. It's probably something you now take for granted. But it shouldn't be taken for granted in the crypto space, and it's certainly not something we took for granted, and I think was one of the leading drivers of why we wanted to partner with BitGo, because we recognized that where you're at in your evolution, the timing was perfect to forge this relationship and provide access to users who want to trade anonymously and want to settle in an anonymous fashion.
Yeah, and I think the other kind of issue you have with crypto is everyone's always thinking you need to be on chain, need to bring these assets around. And so for a custodian who's kind of trying to protect security and assets offline in a vault, much like the one we're in today, they haven't had a conduit to be able to go and trade on these different ecosystems. And so that's what we're really doing with you. So clients can still hold their assets in cold storage, they can still trade on your platform, and then they can still realize and settle those assets directly into their cold storage custody account. So that's providing a very different narrative to, as you said, when people go and trade on exchange and having to then execute on that exchange again, they don't need to go and do that. They can now trade from cold storage anonymously in a deep liquidity pool and instantly settle directly back into their custody account. They get to keep control, which I think is hugely important. And any of the new entrants into this space don't necessarily know that that's available or something they can do. So super excited to be working with you guys on this and going out and speaking to more participants. We are still kind of in the nascent kind of growth of this industry. We are a speck on the larger financial markets industry, but it's growing and the evolution is only going to increase now. I think obviously seeing a couple of weeks ago in the White House, there's 80 or 90 people gathered there to try and actually understand and create policy to move this industry forward after it's been held back for the last 4 years or so. And so for those TradFi entrants to really want to enter into this space, they need to do this knowing that their assets are secure, that there isn't a potential hack of an exchange taking place or something else. So by using regulated custody that they're very familiar with in their kind of everyday lives in FX, equities, bonds, and so on, and being able to just translate that into crypto is very important. And I think it will help time to market as well. The compliance teams are now going to be evaluating something they're familiar with. From the ECN space, to the custody space, they know how these processes operate. They're familiar with the people in the space, and it's going to be a much quicker time to market to bring these guys to the crypto.
Well, if you can believe it, we when we first started the company and the very first month of live trading we launched, we were getting all kinds of credit for having a UAT environment and having effectively a fixed gateway, something that TradFi firms are accustomed to was fairly novel at that point in time in the crypto space. I think one thing about kind of institutional adoption and the momentum that we have post-election is, if you think of it, let's say from a bank perspective, banks want to eventually come in and trade the way that they do any other asset class. Now, there's two things they think about. They think about price discovery. Where are they going to generate prices from? And then where can they lay off risk? As they enter risk, where can they go to lay off risk? And generally, what we found in the FX market that I know you know all too well is that the banks will typically go to several venues, which are ECNs and typically anonymous in nature, to do their risk transfer because it has the lowest amount of market impact. For those listening in, what is market impact? Market impact, if you can imagine, you have a large order, a large amount of risk, and you want to get out of that risk, you don't exactly want the entire world to know that you have a position, right? Because you'll find that at the end of that trade, the prices are deteriorating, right? And so the anonymous nature of how you execute those trades and the ability to use advanced order types in an ECN style of execution format becomes very, very important. So we've always felt really good about where we sit in the ecosystem, what CrossX delivers, but one of the biggest areas, one of the biggest gaps that we needed to address was this idea of are there partners, right, who can step up, who can actually clear and settle that trade while maintaining that post-trade anonymity, right? And so again, I come back to this point to stress that at the surface, it seems like a somewhat trivial point. It's anything but. It really is, I think, mission critical to the ecosystem, and I think it's mission critical to getting larger scale institutional adoption into the space. I'll say one more thing before I kind of get your reaction to those points, is that everyone has been talking about the regulatory piece in crypto. Super important, definitely something that the industry needs, right, to grow. Everyone's been talking about what you just hit on, which is the safety of the assets, right, and the role that crypto custodians play. And I think there's a lot to be said for an independent custodian. We've seen some, unfortunately, some not so great things happening from some of the vertically integrated custodians. But I think another piece that's not talked about enough is what is needed in the space from a market structure standpoint to support institutional growth, right? So we haven't had that over the past few years. And again, through this partnership, I think we're still early innings, but I think we're really building a foundation to allow mainstream institutional adoption.
Yeah, agreed. And I mean, perhaps you can just touch upon for people, who aren't familiar with the ECN flow, maybe they don't work in the kind of FX markets and so on. Some people might think they can just literally buy and sell on your platform, that's it. Can they run different order types? How does that kind of set up on CrossX? And I've heard you talk about recently, but perhaps you can just touch on here some of the kind of developments that you're looking at, because I think the growth has been tremendous over the course of the last 12 months, and it's really exciting to see. That's without those new entrants into the market. So I'm sure you've got a load of developments kind of ready and primed for this.
So the main execution style that's existed in crypto to date is what's called the central limit order book model, or CLOB for short. It's pervasive. It's the dominant model in retail. And what the CLOB is it basically says it doesn't matter if you have one client or 1 million or 10 million, you only ever have one market data session and one pool of liquidity. And so this is problematic when you think of it from the standpoint of adverse impact. And so if you have a user at a moment in time who's predatory in nature and rips through liquidity, it has a negative impact on spreads for all users that are in the system. So it's a difficult platform to scale, but the key is it's a difficult platform to scale institutionally, right? In the retail space, it's a perfectly fine model. What happens with institutions is institutions are running very, very different strategies from one another. And on CrossX, in our ECN model, what happens is every taker of liquidity has their own market data session and their own pool of liquidity, right? So if we have 50 independent takers, we have 50 independent liquidity pools, and each taker can actually flash their interest to cross with other takers on the system. And so it scales exponentially. This is one of the reasons why we're big proponents of about bare metal. In order to operate and take in the amount of market data that we need to process and execute trades in single-digit microseconds, we have to be hosted in bare metal to scale. So we're in Equinix LD4, we're in Equinix NY4 and NY2. We did a pilot in AWS Tokyo, and we'll soon be going to either TY3 or SG3, basically to support the scalability of the platform. To the question about kind of where we're going is, for the past year and change, we've had, fairly straightforward order types. and we're going to unveil a whole suite of new order types that's going to include mid-match, which are a series of peg to mid. And so users can effectively look at mid with different, various ways of how they want to play with mid. We're even going to have the ability for customers to request specific bespoke order types, which we can develop intra-week. And so part of our framework is the ability to launch quite a bit of feature enhancements in near real time within the system. And so that's kind of a look forward into what we're doing. Again, why are we doing that? It's all to support this influx of institutional adoption that we've seen coming over the past year and change, but that certainly post-election is coming in waves.
Yeah, it's I think it's given a bit of a kick, and it's kind of exciting, fortuitous but exciting the time, and the announcement of the partnership. I think it's got a lot of people's attention. A lot of people I used to work with are asking what this is. Does it look like traditional models? And the simple answer is yes. And so it's very easy to then further those conversations. But look, we're thrilled to have you guys on board, and we're looking forward to kind of the partnership growing over the coming years.
I've got one question for you, if I'm allowed to ask questions. Okay, so you guys have been around for a long, long time.
Yep.
Right, one of kind of the great companies in all the industry. Have you seen behavioral change kind of pre and post election? Are you feeling, I'm talking about momentum and energy. Is that something that you folks are seeing as well?
Yeah, definitely. Look, I don't sit in the US office, but I think the team here, both kind of around the election time, obviously with the positive result coming in, I think more recently in the last couple of weeks, there's been a kind of step change in attitudes. I think if you look back at whether we call it Operation Choke Point 2 or any of the kind of debanking of not just crypto, but kind of fintech entities, I think there's been, the day after the discussions at the White House, the OCC immediately came out and said, banks can touch crypto. That is a significant change, and I think there are conversations that are now being enabled just from that simple statement that was released. So from a market standpoint, even in such a short space of time, we've seen significant change. We're hugely optimistic as to what's coming. Still a long way to go. Don't get me wrong. Optimism is one thing, but actually then going and delivering on what the market needs is very different. But it's completely different from the last 4 years, and it's a 180 of the largest proportion.
In terms of what's going to come, what we envision, to the point of where I'm comfortable even making certain levels of prediction. If you go back and look at the monthly volume of centralized exchanges in the space, we've been trading in a range from 500 billion to 3.5 trillion per month. And if you look at last November, we have an election. It's very, Trump wins. There's a lot of, again, energy and positivity. Everyone's high-fiving, and at the same time, Bitcoin goes through 100,000, right? So high fives all around, everyone's happy. The market traded that month, do you know what the number was?
No.
2.7 trillion. So in terms of total volumes, the market did absolutely nothing spectacular, right? Which is kind of a story, again, that's not being discussed enough. The reason this is occurring is because of market structure. It's because of the vertically integrated model is holding customers captive, right? So what do I mean by that? If you look at the foreign exchange market, an institution, when it comes to execution and clearing, pays how many dollars per million, roughly? What would you say? $1 to $5 per million? Is that fair?
In a range, yeah.
Right, so we'll call it $1 to $5 per million for execution and clearing, right? Today, on some institutional crypto exchanges, the default rate is 10 basis points, which is $1,000 a million, all right? And then everyone is asking the next question without even realizing this, well, where is all the volume? You can't trade orders of magnitude if you're paying $1,000 per million, okay? And so what we predict is, and we said this when we started the company, when fungibility is introduced into the space, meaning, again, what is fungibility? If we look at the current model, if you buy Bitcoin dollar with Exchange A, you have to sell Bitcoin dollar with Exchange A. They're always guaranteed that second trade. Through the BitGo Go network, If you buy Bitcoin dollar with CrossX, 10 minutes later, you can sell it anywhere you want.
Yeah.
Okay, that's called fungibility. That gives the participant the ability to trade across a menu of liquidity and venues while net settling. And so they're not captive to where they trade. And so for that, I have to show the best prices possible. And my fee has to obviously be very cheap, or I'm not going to win many trades. So that competition reduces the cost to trade. What BitGo is doing through the Go network is reducing the cost of capital. Because again, if we go back 2 years and you're an institution and you want to trade with 100 venues, you're sending money to 100 venues and settling with 100 venues.
Yep.
Whereas now you can come to the BitGo Go network and again, like I just said, just settle with you, but access all of these venues. So the cost of capital has now collapsed. So where we think, what does this look like? What we think this looks like a year from now, 2 years from now, you're going to see more TradFi market structure introduced. And the result is going to be two things. Volumes are going to skyrocket orders of magnitude. Collectively and comparatively, fees are going to compress. And so business models are going to have to be used, effectively prepared for that.
I think everything is positive. I think we still don't have the market structure, as you say. Whilst everything's been positive, no rules have actually been written down about how to engage. So I think that is to come. I think it will be an enabler. I think it will bring a lot more market participants into this space than it pushes out of this space. And to your point, the more people are in here, the more they're able to trade. Yes, spreads will decrease. That is a fact of life in any type of business that you work in. Those spreads will compress. So that's both on the trading side, potentially on the custody side, on all the different vendors that plug into the ecosystem. We've seen it in traditional finance as well. But as everything rises together, I think we will see just that market grow overall. So that's just talking about the US. I think, look, Europe's got MiCA in place. I think there's a few things to work out there. As nice as it is to have a regulation in place, I think it needs some tweaks. And then we've got Asia kind of following as well. So I'm hugely optimistic. There's a few different ways it can play out in that optimism, but nonetheless, I think it's all positive.
Look, I'm going to stay, if we're going to get into regulation, then I'm going to, the statement that we've made repeatedly is that if you look at what happens with the blockchain, if you look at what the nuance of custody, tokenization, I would put into this bucket, those are real innovations. If you actually look at market structure in the space, there's nothing new.
Yeah.
Right? And so not surprisingly, if you look at MiCA in Europe, it really looks and feels like a copy and paste of MiFID. It's not terribly new. And to be quite straightforward, I don't know that that's a bad thing, right? And I think hopefully in the US, we can follow suit, and I would love to see, either the SEC or the CFTC take a page out of its own playbook, create a lane for crypto when it comes to market structure. We think the CFTC makes a lot of sense in the way that it regulates foreign exchange, but I don't think we have to get overly complicated with the market structure framework, albeit I recognize coin listing and custody itself has its own nuance. So I think if we keep market structure regulatory framework the same, I think we're going to have a lot of positivity, more room for positivity.
Thank you very much for joining us today.
Our pleasure. Thank you, Brett.